Hello there. Gold, early Newton movement with gold will result to a lot of pips. So you don't want to mess around with gold. So that is why today I want to show you how you can trade gold. You can trade gold by using your 15-minute time frame and 5-minute time frame. For the rest of JBP USD, you can trade with higher lots, higher time frame, like 1 hour. Even you can enter on a 1 hour time frame, you can enter on a 30-minute time frame. But for gold, you want to enter with 5-minute time frame. Some people that are scalper go down to even 1 minute time frame, right? So you can enter your trade there. So let's go to my chart. Let me show you how you can mark your zone and how you can drop it down to 5-minute time frame for your entry. So guys, today I want to discuss how to mark your level from the higher time frame and drop down to 15-minute time frame or 30-minute time frame to trade. You understand? But in this case, we are checking gold. We are talking about gold, and gold moves so fast. You understand? And it carries a lot of pip. A small movement on gold could give you a pips that a euro USD movement cannot give. You understand? So that is why it is advisable of you to always trade using the 5-minute time frame. You understand? Some people goes down as low as 1 minute time frame on gold to enter their trade, which is fine. But for those guys that is okay with 15 and 5-minute time frame, you should stick with that. You don't want to use 30-minute time frame to judge your entry when you are trading gold, right? You want to be on a safer side. So let's do a quick breakdown on how to trade gold following the drop down analysis or marking your level. You understand? So if you look at this chart, this is the today is on Saturday, right? This is the last candle that closed for the week. And this was the previous candle for the last week. It was the previous week's candle. Yes, you understand. So you just want to put into consideration these three candles when you are doing your analysis from the weekly time frame. The last three candles should be into your consideration. You understand? So this week candle all closed as a bearish candle. So hopefully we are going to see the price moving towards this liquidity. So this liquidity here, we can take it as your key level as well. This is your liquidity, and obviously this is another liquidity sitting above. You understand? But if you look at it critically, since this week candle close as a bearish, the likelihood of price moving towards this liquidity is very high, because we close this week's candle as a bullish candle, right? You understand? We close this candle as a bullish candle. You understand? As a bullish candle. So no, sorry, we close this candle as a bearish candle. So the tendency that the next candle will continue printing towards the downside is very high. You understand? So, and this is the place, this is the liquidity that is next in line. Although we have another liquidity sitting below, you understand, but the very first one that is much approachable right now is this place. This is the place that the market could likely touch. You understand? So let's wait and see how this thing boils down. So let's head to daily time frame now to find another refined zone. So this is the daily time frame, right? So this is a daily time frame. You understand? Remember, this is the liquidity that we mark uh from the from the 1 week time frame. Now look at this. You can mark this zone, this last bullish candle that pushed the market to the upside. You can mark it as your zone on the daily time frame. You understand? You can mark it as your zone on the daily time frame, believing that price could come down to this zone. Let's go further down to 4 hour. Maybe we can refine this zone again. Can even refine it. You understand? Look at it. You see, you can even try to refine this zone. Can even try to refine this zone down to the last the last bullish candle that caused the movement to the upside, right? You can refine this zone. You understand? You can refine this zone down to this level. So remember, this zone. It is not we are not predicting, we are just reacting. It is a zone, and once something is a zone, you are marking it ahead of the price action, that okay, if price come to this zone, whatever happen in this zone, that is what is what you are going to use to know your direction or your bias. You are not saying that once price touches this zone, automatically it will move to the upside. No, no, no. You are just drawing it you are just drawing it in anticipation of whatever price is going to do around the zone. If the price push down, and if the price push down to this zone, you understand, if the price push down to this zone and give you the sign or the signal to continue to the buy side, once the structure changes, you can continue to the upside. But if the price come to this zone, right, and it breaks it, having a retest and continue doing break of structure, then you are up to sell the market. You understand? We are not rigid in the market. We are flexible, meaning we are waiting for whatever price will give us, and we'll start to do according to what the price will give us, right? You understand? So this is another critical zone that we are believing that price will likely uh come and take. You understand? You understand? So this is another liquidity here. We have another liquidity sitting here, right? So if by next week I see a little gold push a little back into this fair value gap, let me mark this fair value gap for you guys to see it very clear. You see this fair value gap, right? If I see gold moving towards this fair value gap, you understand? If I see gold moving towards this value gap, price push towards this fair value gap and feel it and continue downward, I'll take a sell. You understand? I'll take a sell targeting this zone. You understand? But it is going to be a long ride. So of course I'll not target the zone, just saying what is possible in the market. You understand? So this is it. You have to wait for the price to pull back into this zone. You understand? And believing once the price pull back into this zone, you know that all this liquidity are up for grab. By that time, this place is going to be eventually turned to liquidity. You understand? This place is going to turn to a liquidity. And this liquidity here that have not yet been swept, this one is already gone. The price has already taken out this liquidity. So we are just waiting for these two liquidity. So we just want to see price go up, at least feed this fair value gap to this supply zone. See this supply zone, right? See this supply zone. Just want price to go to this supply zone. You understand? So price will just go to this supply zone, and boom, whatever happened in this level, that is what we are going to use to find our direction and hopefully believe price to touch this zone. You understand? So guys, that is what we have in the market, and that is how to mark your level. This is 4 hour, right? Once the 4 hour is given to you, you have seen the direction or possible direction of the market from the 4 hour. You want to head down to 1 hour. 1 hour, you can use it as your confirmation. You understand? You can use 1 hour as your confirmation. You understand? Then from 1 hour, you scale down to 5 minute time frame or 15-minute time frame. Right now I'm on 15 or 5 minute time frame. You can use the 5 minute time frame for your direction. Remember, this is the fair value gap and the supply zone we mark from the from the 4 hour time frame. So you want to wait for price to return to this level. If you are looking for a sell, you want to wait for price to return to this level. You understand? So once price return to this level or feed this fair value gap, price will just decide to stop at this fair value gap. It is happened. Nothing is impossible in the market. It could stop at this level, right? If this the supply fair value gap, or it will go up. But remember, price will always, if even if price want to change direction from the fair value gap, it is going to give you the sign. It could be a liquidity sweep, or it could be a candlestick confirmation coupled with a liquidity sweep. So once there's a liquidity sweep to the upside, boom, and the price continue to start selling to the upside. So you can now see that. Let me show you why it is important to use the 5 minute time frame for your entry. Let's say after the liquidity sweep and you want to start selling from this level, you know a little move, you understand, this little move like this already 50 pips already, and this stop loss that we just show you is already 23 pips. No, it's already this 23 for gold, if you have to multiply it by 10, that is already 230 pips. You understand? That is a whole lot. That is why you have to come down to 5 minute time frame. You understand? And put your stop loss, let's say around uh 50 pips or 70 pip or let's say 30 pip. You understand? Have a tight stop loss. You understand? Then you start selling to the downside. Let me show you another. Let's use a real candle example for this scenario. Like this is the 5 minute. If you want to sell gold, you understand? If you want to sell gold around this zone, targeting. If you want to sell gold around this zone, targeting this liquidity, right? After the closure of this last after the closure of this last last 5 minutes candle, you understand, you will be preparing to sell the market, right? You understand? Let me show you how to put a stop loss now. You understand? If you put your stop loss a little bit above this above this above this 5 minute candle, you will discover that that is a 20 pip stop loss already. You understand? That is a 20.9 already 30 pip stop loss. You understand? So because you are this 2.9 for gold, if you want to convert it to pips, you have to multiply it by 10. So if you multiply this 2.917 by 10, it is approximately 30 pips. You understand? So that's why you have to always use 5 minute time frame for your entries, because it will give you a tight stop loss for the good, and it will only give you a little risk. You understand? Compared to when you are using it on 1 hour time frame. Imagine you are using 1 hour candle close for your stop loss on gold. Guy, that is a whole lot. So you are going to lose a whole lot of money if the price turn against you. That's why it is very advisable to use 5 minute time frame for your stop loss, right? You understand? So please, this is how to trade gold. Don't use higher time frame like 1 hour, 2 hour time frame, or 4 hour time frame for your entry, except you have a huge bag of money that you want to risk in the market, or you are a swing trader. Or if you are a day trader or a scalper, you have no business with 1 hour time frame on gold or for your entry. You can use it for your analysis, for your confirmation, just like I showed you down from 1 week time frame, right? So you just want to stay on the safer side and use 5 minute time frame. So peace out for now. If you have any question, you can reach out to me. My Telegram community will help you. We are just like brothers helping ourselves, right? So you want to join us, keep in touch with us, bring your problem to us, let's solve it together. Peace out. Thank